Good morning and welcome to VSA Capital Morning 5-minute Morning Miner. Gosh, remember the name of it. It's Tuesday, November the 2nd. Slightly chilly morning this morning, Paul.
Chilly, but bright and clear, nice and sunny outside.
Yeah, there was definitely a chill in the air there as I cycled in this morning. I might have to start putting slightly warmer clothes on. Anyway, let's crack on. There's quite a lot to go on this morning. Obviously, I mean, it is connected to battery metals and things like that. There's a lot of news coming out of COP26 with deforestation being halted and the Queen giving a passionate speech, etc., But we can all follow that. But let's start off actually with our corporate client. Caracol Gold has given us an update today, hasn't it?
Yes, they have this update on their Kalima Pesa gold project and their area exploration there in Kenya. The mill averaged just under 500 tons per day treated during the month of September, and they are working toward a steady state production rate of 700 tons per day from the mill. And that, given the equipment and plant modifications and underground work that they're doing as a result of the funds they raised on coming to the London Stock Exchange just a few weeks ago now. They have reopened two additional adits at the deposit in order to accelerate the amount of tons to be produced on a daily basis. They recovered about 570 ounces of gold in September, which is a nice rise on sales for August and July. All-in sustaining costs, they had reported at $1,694 an ounce, but that includes all of the plant upgrade expenditure and mine work expenditure as well. So they expect those costs to come down as the production rate rises from the mill and the mine, and the attachment of grid power to the plant should also bring another 100 ounces or $100 an ounce off of the current costs. They do think that the Kalima Pesa project has the potential for at least 25,000 ounces of annual production a year and about 2 million ounces in resources and reserves in coming midterm period of several years. So they're working hard to make progress on that.
Glad to hear they're working hard. Now, look, there's a whole lot going on in the lithium market at the moment. First of all, we've had a third bid, haven't we, for TSX listed Millennial Lithium, which obviously we raised $38 million for 5 years ago before people had hardly heard of lithium. Ganfeng tried, then CATL tried. Now Lithium America is having a bid, aren't they?
Yes, they have. Lithium Americas has stepped in with a bid of $4.70 Canadian per share for Millennial Lithium, which values the company at about US $400 million. And if that's accepted, then Millennial shareholders would own just under 10% of Lithium Americas. The rationale behind that is Lithium Americas already has production up there on the Cauchari Basin, which is up to the north of the Pastos Grandes Basin of Millennial Lithium by about 50 kilometers or so. So there is some operating synergies to be realized if the deal goes through.
Now, look, what I think is interesting here, right, Paul, is, I mean, that deal's fine. We've actually got American Lithium, not to be confused with Lithium Americas, coming over to London on the 15th and 16th of November, and we're doing meetings with them, which will be interesting. Anybody who wants a meeting with them, then do let us know. We're also putting on a retail evening for them. But I think one of the interesting things, I was looking at this morning, and I think you have as well, is that if you look at the share price of Lithium Americas and the share price of American Lithium, and actually all of these international lithium stocks, they've absolutely gone through the roof. It's stunning. I mean, they're up, 5 to 10-fold. Whereas in the UK, the sort of three companies we've got Savannah, Iron Ridge, and actually Cadence. I mean, Cadence is a funny company, and I'm not sure it's quite mainstream enough. But Savannah Resources, which obviously has Spanish lithium, and Iron Ridge, and of course we'll come on to Iron Ridge later perhaps because they've just talked about their gold spin out, basically haven't performed at all, and they've just lagged the whole industry. I'm not sure if it's why London has never really quite understood lithium. I don't think. We let Bacanora go, to be honest with you, to Ganfeng at far too low a price. But Iron Ridge and Savannah, I mean, they're both outrageous buys, aren't they, Paul?
They are definitely under appreciated here, and that's but certainly would be of interest to anybody that's on the buying side who wants to take over existing deposits or operations or ones that will be developed with under a London listing because they are undervalued in comparison to all the other deposits on a per ton of lithium carbonate basis, no question.
Yeah, well, I agree with you. I was writing this morning at 7 o'clock to my clients about that. Now, look, whilst on Iron Ridge, they've announced today how they're demerging Rika Resources, which is the gold asset, with a fully underwritten rights issue of Aussie dollars 7.2 million, haven't they? And I think you get one Rika share for every 8 Iron Ridge shares. What are any thoughts there, Paul? I mean, a lot of it is the technicalities of it all being done. Any thoughts additionally?
It is according to what they had set out previously as the idea for the demerger as far as the terms are concerned. This is the formal filing, but it also indicates that one broker is essentially willing to underwrite the whole deal to make it happen.
Yeah. Underwriting something we used to do lots of, but it sort of died out. I'm a great fan of underwriting. It's good for everybody. Anyway, that's a completely different conversation. I also noticed, I mean, talking of all this sort of corporate activity and bids, that Apollo Consolidated, hasn't it? Has that been bid again for by Ramelius Resources? Did I see what's going on there, Paul?
Yes, that's also a bidding war. That's a bidding war underway for the Lake Rebecca gold deposit in West Australia, where Ramelius had made an initial bid for Apollo Consolidated, who holds that project, but Gold Road Resources, the West Australia gold producer, had stepped in with a bid to gazump that, and now Ramelius has come back with an enriched offer to go above Gold Road's bid. So we're looking at about $181 or $81 million Australian now is the valuation on Apollo deal. So that one is definitely playing through. And just to say that that's of interest in London because the London quoted royalty firm Trident Royalty has a royalty interest in the Lake Rebecca deposit.
I mean, we've been saying for some time, Paul, haven't we, that there's going to be huge M&A activity in this space, actually, as people get desperate for certain resources, lithium and gold being classic ones. There's quite a few small gold exploration plays that are proving up really quite big gold and sometimes copper as well, which is big for the majors. And, they're going to get swallowed up. So just a matter of time. The market is not realizing that. Also worth mentioning, I think one that a lot of people follow is Horizonte Minerals, I think, has had some news this morning, hasn't it, on the nickel front?
Yes, it has, actually. And that is the formal filing of some of the paperwork in order to get the funds released that have already been arranged of $125 million in order to get the construction work underway on the Araguaia nickel deposit they have down there in Brazil. So that's is a regulatory requirement announcement.
Yeah, quite important to get 125 million Canadian dollars released, though. Anything else you wanted to talk about in terms of news, Paul?
Yes, there's many Barclay Energia shareholders out there in London, and they're not going to be happy to see the announcement out today of the halt of ASX trading in those shares. It appears that the Oman authority, who had given them 75 million in convertible note finance back in 2017, they're making a call to get paid back now. Looks like Oman is fed up with the Spanish government delaying this project so long. They want their money.
Yeah, that's not too good, is it? I think it's also worth noting steel prices have dropped off quite sharply recently, haven't they?
No, I haven't looked that up lately. Tell me about it.
Yeah, well, can I strongly recommend that you maybe have a little look, Paul? No, I'm being a bit naughty, by the way, but they have. actually, if you just, it's actually, they've come back down, well, the futures certainly have, below $100. I mean, haven't been up, nearer 200, you sort of mean. They've really fallen quite sharply. I think, look, it's obviously it's going to have a knock-on effect to iron ore prices, because steel and iron ore track each other basically. But also, of course, it's good for the global economy to see that commodity prices can actually come whizzing off, particularly steel, because it was really starting to hurt things in containers and things like that. So I think just be aware, we've had this incredible run. And again, we've mentioned this before on this podcast, incredible run in commodity prices. Things don't keep going up forever. And, the ones that really are in demand, like lithium, gold, copper, yeah, they can maintain their highs. Probably certain things like tin and tungsten, I still would be positive on. But just watch it. Things like coal and iron ore, which have gone up really for no reason at all other than COVID squeezes, are going to come off sharply. So, yeah, just watch it. Those steel prices have really slumped.
Yes, and I think that's a result, too, of the concerns around power availability in China. So curtailments, and we're headed into the winter season where air pollution is a problem. So they try to limit smelter output there in China as well. This
podcast has gone on too long as it is for a 5-minute morning miner. But actually, it's worth bearing in mind in China, if in case people haven't seen it, there are a lot of local lockdowns taking place at the moment. In fact, China is having a complete resurgence of COVID, particularly the Delta variant. They're even telling citizens to stockpile food just in case the country has to go into a full lockdown again. This could potentially cause China quite a lot of issues, which obviously then has a knock-on effect into just about every industry, but obviously big knock-on effect on the mining industry. On that note, Paul, we better call it a day, and we'll speak again tomorrow.
All right, very good.